Have you ever heard of a single flower bulb costing more than a house? No, I'm not kidding. This actually happened. Today, we're diving deep into one of history's most bizarre and fascinating financial bubbles, the 17th century Dutch tulip mania. How did a simple flower bring an entire nation's economy to its knees? Stick around, because this story is a wild ride of greed, speculation, and beautiful petals that's more relevant today than you might think. Let's set the scene. It's the Dutch Golden Age, the early 1600s. The Netherlands is a global powerhouse of trade, art, and science. Wealth is pouring into cities like Amsterdam, and for the first time, a thriving middle class is emerging with money to spend and a desire to show off their new status. This is where our story's protagonist enters the stage, the tulip. Tulips weren't native to the Netherlands. They were imported from the Ottoman Empire, and their exotic, vibrant colors were unlike anything the Dutch had ever seen. They were a luxury item, a status symbol. If you had a rare tulip blooming in your garden, you were the talk of the town. It was the 17th century equivalent of owning a limited edition supercar. But what made these tulips so special? Well, some of them had this incredible, unpredictable quality. A plain red tulip might one day bloom with beautiful, flame-like streaks of white or yellow. This was caused by a virus, though they didn't know it at the time. They called these rare, multicolored tulips broken bulbs, and they were the most coveted of all. Varieties with grand names like Semper Augustus or Viceroy became legendary. Initially, the trade was confined to a small circle of wealthy connoisseurs and professional growers. They bought and sold bulbs for high, but somewhat understandable prices. But soon, the allure of quick profits started to attract everyone. Merchants, artisans, sailors, even maids and chimney sweeps began to dabble in the tulip market. People saw their neighbors getting rich overnight and thought, "Hey, I can do that too." This is where things start to get crazy. The demand for tulip bulbs exploded, and since it takes years to grow a tulip from a seed, the supply was extremely limited. Basic economics, right? High demand, low supply equals soaring prices. And soar they did. Prices for common bulbs started climbing, but the real frenzy was around the rare, broken bulbs. People weren't just buying tulips to plant in their gardens anymore. They were buying them purely as an investment, with the sole intention of selling them for a higher price later. This is the classic definition of a speculative bubble. The market evolved. To make trading easier, especially during the winter when bulbs were in the ground, a futures market developed. People started trading promissory notes for bulbs they didn't even own. You could buy a share of a tulip bulb. These trades often happened in taverns, over drinks, with deals scribbled on scraps of paper. It was a fast-paced, high-stakes game fueled by optimism and a healthy dose of herd mentality. Everyone believed the prices would just keep going up forever. What could possibly go wrong? At its absolute peak, around the winter of 1636 to 1637, the madness reached its zenith. A single Semper Augustus bulb was reportedly sold for the price of a grand estate on the Amsterdam Canal. Other accounts tell of bulbs being exchanged for entire cartloads of wheat, oxen, barrels of beer, and thousands of pounds of cheese. People were liquidating their life savings, selling their homes, and taking out massive loans, all to get a piece of the tulip action. It was a national obsession. The belief was that the passion for tulips was so ingrained in the Dutch that the demand would always be there. Foreign buyers would surely come, and prices would climb to infinity. And then, in February 1637, it all came crashing down. The turning point is believed to have been a tulip auction in the city of Haarlem. For the first time, there were no buyers. A wave of panic suddenly washed over the market. The collective delusion shattered. Everyone who had been holding onto their bulbs, expecting prices to rise, suddenly rushed to sell at any price. But there was nobody left to buy. The market evaporated almost overnight. Prices plummeted by over 90%. People who had been paper millionaires one day were bankrupt the next. Those promissory notes for future tulips were now worthless pieces of paper. Imagine taking out a mortgage on your house to buy a tulip bulb, only to find out a week later that it's worth less than an onion. That was the reality for thousands of people. The fallout was messy. The courts were flooded with lawsuits from buyers who refused to pay the astronomical prices they had promised for bulbs that were now worthless. The government tried to step in, offering to void contracts for a small percentage of the original price, but the damage was done. Fortunes were wiped out, and trust in the market was shattered. Now, it's important to add a little modern perspective here. For a long time, the story of tulip mania was told as a cautionary tale of a nation gone mad, an economic catastrophe that crippled the Netherlands. However, recent historical research suggests the crash might not have been as widespread or devastating as the traditional story claims. Many historians now argue that the mania was largely confined to a smaller group of wealthy merchants and speculators, not the entire population. The economic impact on the Dutch Golden Age as a whole was probably quite limited, but even if the story has been exaggerated over the centuries, the core lesson of tulip mania remains incredibly powerful and relevant. It was the first well-documented speculative bubble in history, and it provides a perfect template for understanding the bubbles that have followed. From the dot-com bust of the early 2000s to the 2008 housing crisis, and even the recent volatility in cryptocurrency markets, the story of tulip mania teaches us about human psychology, about greed, and the dangers of fear of missing out, or FOMO. It shows how easily rational people can get caught up in irrational exuberance, believing that this time is different. When asset prices detach from their intrinsic value and are driven solely by the belief that someone else will pay more for it later, what's known as the greater fool theory, a crash is almost inevitable. So, the next time you see a market going crazy, whether it's for stocks, digital art, or something else entirely, remember the humble tulip. Remember the Dutch speculators in smoky taverns, betting their fortunes on a flower. It's a timeless reminder that what goes up, especially when it goes up that fast, can come down even faster. History doesn't repeat itself, but it certainly rhymes. What do you think? Are there any modern-day tulip manias happening right now? Let me know your thoughts down in the comments. I'd love to hear what you think. And if you enjoyed this journey back in time, please give this video a thumbs up and subscribe to the channel for more fascinating stories from history. Thanks for watching, and I'll see you in the next one.